Hey guys, Akil Stokes here. Welcome back to another edition of the Weekend Trading Edge, your weekly look around the markets where I come in and show you the best trading opportunities that are on my radar for the week ahead, and of course some very helpful trading lessons that are meant to push you along that path of becoming a consistently profitable trader. I don't have the video camera on today. I forgot, so you don't get to see my beautiful face. However, that may be a good thing because I noticed that the videos get more views when I'm not on camera, which is a little bit disappointing. But anyway, in today's episode of the Trading Edge, we're going to take a look at and we're going to discuss. So let's hop in. Let's start here on the pound Canada. And you can see that recently we've had a lot of consolidation. Now there's a lot going on in the market. One, it is summertime, so we're naturally seeing more choppy and slow movement in the market. But we also have a lot of stuff happening next week. We have a lot of European elections coming out starting over the weekend and going into next week. We have the July 4th holiday in the US next, Thursday, I believe. And then we come back on the 5th, which is a Friday, with our jobs number. And of course, all the prerequisite numbers sprinkling in between there. So it could be a very interesting week in the market. But what we have here is one of my favorite setups here on the pound Canada, especially if you are a mercenary trader. Now, when I say a mercenary trader, I don't mean that you're dressing up in fatigue and you're actually going out there going to war, but I mean that we are traders, not investors, right? Investors typically have a kind of a personal stake in a company, and that's why you make that decision and long-term outlook. Traders, we kind of just go where the money is, right? We don't really care long-term bullish, long-term bearish. We're looking for short, selfish term moves that we can make as much money as possible and then we can get out without being harmed. And that's why I love this particular setup. You see, the market has been going in a sideways channel. It's not your cleanest sideways channel because of these long wicks down here, but I think 10 out of 10 traders can agree that we've been going sideways. So what I'd like to do here is I like to bracket this type of zone, right? I like to find the highs, which are right here, bing. I like to find the lows, which are right here, bing. And essentially, I'm not too concerned with what happens in the middle. There are methods where you can trade from structure to structure, support to resistance within here. Advanced patterns often exist in here on lower time frames. But what I like to do is I like for the market to tell me which direction it's likely to break out in, right? I always say this, we want to be predictive in our analysis, reactive in our execution. So, there are many methods, and then there are times and places where you can use methods where you get involved in the trade in advance, predicting that a certain thing is going to happen when you have all the stars aligning and the market is pointing you in a clear direction. That is a great technique to use. However, when you're unsure, like in a neutral case, and most of these kind of classic patterns are neutral. They don't really have a bullish or bearish bias. It's more up to the overall picture. When you're unsure, you just wait for the market to tell you. So I bracket this, right? Support to the downside, resistance to the upside. You can see our resistance level hits an inside level of structure as well, making it more important. And I'm going to wait for the market to break out one way or the other. If we break out to the downside, then I will look for a move to the downside. In this case, there's not a lot of room here, so we'll just talk about the upside, but the downside is an option. If we break out to the upside, meaning a confirmed break and close of this level, then I'm looking for the next area in which price is likely to go. And it's right in here, right? So we can kind of do our details later in the week about specifically where within this zone we would look for a price to go to, but I'll make it easy for you. The lower part of this zone right here is going to be an even handle number right below $1.74. And then the upper point right here, a little bit less than it, is about 174.5. So two psychological numbers in there. And of course, we can draw our fibs and our volume and all that stuff to kind of dial in on this zone once we get this signal. But I'm not too worried about that until we get that violation. So keep an eye on pound Canada. Technically, we can look for a breakout in either direction. The bullish one, in my opinion, has a lot more opportunity. Next up, we're looking at the Aussie yen. Aussie yen is interesting, right? We just put in a rising channel, which is a relief pattern, right? We had a high momentum move to the upside right here. We had a trickle upwards right here, and what we expected was some relief. We expected, well, I expected a little bit more relief. I thought we'd get some right back down to this level. We did not. We did get a little bit of relief right here. Didn't quite get down there before exploding up and creating a new structure high. Now, bigger picture, got to trust me on this, or if you're following along on your charts, go back and look at it. Bigger picture, there is room to the upside we can go. If I remember correctly, we're looking at 107.75, somewhere around there is our next level of structure. And you can see we ended the week here on the 4-hour with an inside bar, which we know is consolidation, right? We go down to the 1-hour time frame, that signal gets a little bit clearer. We have a bullish, there we go, try this again. We have a bullish flag pattern setting up with the retracement of that flag, not quite getting there yet, but coming right back down into, I got sticky things today, here we go, right back into that previous level of structure. So if you're a flag pattern trader, you can look to trade the flag breakout. If you're more of a pullback trader, just wait for it to get a little bit lower back down into the zone, and we can look for a continuation move right back up to that 107.75s. I bet, I have a sneaky suspicion that there's going to be a 127 extension that lies up there as well. Please make me look good for all my fans on YouTube. Yeah! Nailed it. Potential buying opportunity here on the Aussie yen. All right, ringing the alarms. Next is our weekly update on gold, right? We've been looking at gold almost every single week, although I forgot if we looked at it last week. I do too many of these videos and too many midweek videos as well, so all these things run together. Plus, we look at stuff in the live room all the time. But if we didn't, here's an update on gold. If you guys remember, bigger picture, we're looking for shorts on gold. We just missed our bat pattern, right? If you guys remember this from a few weeks ago, we were looking for a short opportunity, X to A, A to B, B to C, C to D, right up here. We did not quite reach it before reversing back down. Now, as you can see already drawn on our chart, we do have another advanced pattern formation here as well in the form of a cipher pattern. Our X to A is going to be this first move down. Our A to B is going to be this first retracement. Our B to C is going to be this extension down. And then our C to D would be right up here if we came to our 786 with our zone going to the start of our X leg. And this is going to be a bearish advanced pattern formation. We're also seeing some head and shoulders action. If I don't have too much on my chart, I'll mess it up some more for you, but you can see a left shoulder right here, a head right here, and a right shoulder that formed there as well. So we do have more potential shorts here on gold if we do push up into this zone. If we go down to the hourly and you're looking for a short opportunity in advance of that, let's draw the line right here. This is our most important previous level or most recent level of structure resistance. If price can violate these lows, I honestly see nothing stopping us from retesting the previous lows once again, opening up a lot of opportunity from right here at about, what's this, 23.20s all the way down to about 23 even, let's say. So now it's time for our sneaky opportunity. We're going to take a look here at Nike. Jumping into a stock for a trading, really more of an investment opportunity here. And Nike has been in the news, not for good reasons. It's been in the news because it's been very bad. There was another gloomy outlook that came with Nike. This has been kind of the trend as of late, and it had its biggest, I think, drop in like 20 years or something like that. It had a really bad day. You can see it on the weekly chart right now. That is a big red candle. Trading and investing 101, big red candle, not good, not good at all, especially when you drop from what, 95 to like 75, whatever it is. And the reason for that again is, a bad forecast, a bad outlook, and this has been a continued trend. But overall, just Nike has kind of priced himself out of the sneaker market, right? Their main sneakers are getting more expensive at a time where people aren't trying to pay expensive, aren't trying to pay big prices for stuff they don't really need. Now, there is some talk about kind of entering like I guess a lower end kind of Nike, similar to like what Adidas and I think Hoka do it as well. But either way, Nike's in some big trouble. And speaking of this, before I get into like the chart, and this reminds me of something, right? So I had a friend, I have a friend, but about 20 years ago, so he's big, he's a big sneakerhead, right? So he collects sneakers, he buys them, he resells them, does all that stuff. That's another reason Nike is struggling as well. I guess the resale market hasn't been great for them as much as it used to be. But I remember introducing him to a website called Stockex, which is like, it tracks different sneakers and their prices, and it's very similar to trading. So let me see, I'm just going to click on something random. I know nothing about sneakers, so I'm just clicking on random stuff because it's here, right? If you want to do this, right, we can view market data. This is going to be very similar to like a level 2 in the stock market, where you can actually see the most recent exchanges, right, of sneaker size and what the price is. So imagine looking at the right hand side of your chart, or wherever I have it on my right, but you have it on the right hand side of my chart, and you're looking at the buy and sell orders come in the different volumes, right? So it's really, really cool to judge interest, right? Volume. It's also really cool to judge price and see if you're getting a deal or if you're getting ripped off. There's also, I believe there's a chart somewhere on here. I don't know. There we go. You can also look at a chart very similar to a price chart with historic prices. You can see in a lot of these Nike shoes, they are going down, going down, going down, going down. Now, you know how I am as an investor. When people go left and everyone's panicking and going crazy, I like to look for a lot of opportunity, and this helped me make a massive killing during COVID. And speaking of COVID, we are getting, with Nike, towards the lows of COVID, right? If we see this big spike right here, right, you can see this came right in March of COVID, where everything got bad, right? Rudy Gobert of the NBA, like, kissed and licked every microphone, and then everyone caught COVID after that, and the NBA got shut down. And once the NBA got shut down, we started taking things seriously. But you can see we're coming towards these lows right here. Now, we have a lot happening in this area as well, right? Not only is this it's not the lowest point ever, as you can see, come on, stocks rise over the years and decades, whatever like that, but it's the most recent kind of low extreme in a while, after the previous level of structure resistance that we just broke. From a technical perspective, we also have a few cool things down here, right? If I just take my Fibonacci extension from swing high to swing low and backwards, you can see that we have a butterfly pattern setting up, X to A to B, B to C, C to D, C to D right down this level. We can also draw out a few one-to-one measured moves, for example. So an AB equals CD pattern from our swing high to swing low right here. Let's copy and paste that. Sticky mouse, there we go, copy and paste that. That's going to put us right down that level. I can even take another Fibonacci extension again from that swing high to swing low as well, right in that level. So you can see 127, 1618, AB equals CD, butterfly pattern, all in the same area around those zones. The only thing that's a little bit different here, if I just take my volume here, we're going to see that the volume is a little bit lower. It's actually going to be at this lowest point right here. So, you know, this is definitely one where if you do find a reason to buy here, just, you know, make sure your stop is below this shelf, because it would not surprise me if we tested this shelf. But if you are someone that is looking at Nike from a buying perspective, when it comes to investing, it's kind of different than trading. Trading, I am technicals first, fundamentals second. Investing, it is fundamentals first, technicals second, right? So make sure you have a fundamental reason to be interested in Nike. Make sure you buy into their new plan of getting more creative and lowering their prices, and you buy into their CEO not being fired, which a lot of people are calling, or maybe their CEO being fired and then bringing someone else in, right? But make sure you have a reason to buy Nike first. After you have that reason that you have the buy, now you're asking yourself, okay, what is the most discounted price I can get? And these are two great levels, right? If I were interested in doing this, and remember we did this with Skechers, I talked about that a few months ago, I would look to buy right down here. And then I would look again to buy, if we go a bit lower, at an even lower price right there, right? Because you're just getting a steep discount. So something to consider here in the market. You can also you can buy right at the price point. If you're aggressive, you can look for technical reasons like test and hold, stuff like that, similar to what we do with the regular charts here on the channel. But I do think if you're someone that is interested in this company, and Nike's a big company, I never see Nike failing. Crazier things have happened, but I don't see Nike failing. So if you're someone that's looking in to get at a very cheap price point, $60 a share or even cheaper, make sure you keep an eye on this. This could be a sneaky opportunity. Too much cheese. Now, before you guys go, make sure you check out the shorts section of this YouTube channel. A lot of you guys have been asking Akil, do you have any place where you give like daily quick trading tips? Yes. The shorts channel of my YouTube, or other social media platforms as well. But here on shorts, there's hundreds and hundreds of videos giving you quick, less than a minute tips on how you can progress as a trader, dropping knowledge bombs on you left and right. So make sure you check it out. I'll see you guys next week with more Trading Coach Podcast episodes and another Trading Edge video. Until then, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.